This is the CIA. We're a fact-based crypto channel. Now, last week, Jerome Powell might have sent us a cryptic recession warning. And if he did, what would that mean for crypto and altcoins? Well, we will break it down with some data and some examples. So, what exactly did he say? He announced that the Fed will be reducing QT starting on June 1st. Now, QT, if you're not familiar, is quantitative tightening, basically, where the Fed stops buying back bonds and lets them run off his balance sheets. It's the opposite of QE, which is money printing. We all know what the money printing does to the economy, it stimulates it. So QT is a form of tightening. Now, by reducing the amount of tightening that they're doing, they're basically easing the economy. And why I say this might be a recession warning is historically when the Fed eases, that is a indication that the economy might not be in a good place. Now, that doesn't mean that a recession is inevitable. Last time they started reducing QT and eventually stopped it was 7 months before the coronavirus recession. And you probably say the pandemic was not a normal recession. So while it might be a sign, it is not a sure bet. Now, I see three different scenarios that could play out. And don't get too scared. I think it's important to look at what could happen and then just keep tabs on what is going on and make our decisions based on the actual data that's coming in. Now, these are the three scenarios as I see it. Now, scenario one would be inflation stays high, maybe even increases, and the Fed is forced to hike rates. Now, I say this would be the worst case because this is where you get into stagflation. And stagflation is bad because it cuts the purchasing power of consumers and businesses. Goods would be more expensive and there'd be less money in the economy for banks, businesses, and consumers to spend. And that's a little bit of a oversimplification, but I think it paints the picture. Now, we'll be watching inflation and see if it does indeed come down, which I think it will. I think it's just a bounce because a lot of that built in is the housing. Housing is on like a 6 to 12 month average, so it's delayed. Also, you've seen oil prices start to come down recently, which is a sign that inflation is also coming down. Oil plays a big part in inflation numbers. The second scenario is a recession. Now, I don't think this is going to happen next month or 2 months from now, but it's something we need to keep an eye on because the yield curve is one of the leading economic indicators, and it shows that it is still inverted. And we won't know if we're out of the woods until that thing starts to cross the zero line. A couple of the other economic indicators keep an eye on are unemployment numbers, housing starts is a big one, and housing permits, and also like some other ones like PMI and manufacturing indexes, as well as consumer sentiment. And you saw today that Michigan Consumer Sentiment Report actually missed expectations. I think it came in at 67 versus expected 72, which is not good news for the consumer. Let's go on to scenario three, which would be the best case scenario. And this has happened a couple of times in the past. I think the last was in the mid to late 90s. And that would be a soft landing. And in that case, again, we'll watch the economic indicators and kind of see how the economy performs over the next coming months and quarters. Now, since I'm a crypto channel, why would I be concerned about the greater economy? Well, Bitcoin and crypto are risk assets. And I know there are a lot of Bitcoin bros out there that beat the drum that Bitcoin doesn't act like the stock market, it's independent. And that just simply isn't true if we look at the data. So let's go back and look at some of the charts. Now, this is the S&P plotted against Bitcoin. S&P are the candlesticks, and Bitcoin is the orange line. You can see when in 2018, when the stock market took a little tumble and had some rough times, Bitcoin also took a tumble, went down in price. And then when it recovered, when the S&P recovered, Bitcoin also recovered. And then again in the corona pandemic, stocks went down, Bitcoin also went down. And then when the Fed turned on that money printer, S&P went up, stocks went up, and so did Bitcoin. So you can see there is a clear relationship between what Bitcoin is doing and also what the S&P 500 is doing. Now, this video is not designed to scare you whatsoever, but I think it's really important to understand what could happen and just keep an eye on the different indicators that could tell us, what might happen in the future. Now, this bull run very well could last to 2025, like a lot of crypto experts expect, but there's also the chance that it might be cut short by the economy losing steam. So I think it's really important that we keep an eye on it so we get our exit points as perfect as possible. Now, I think the best question to ask is how will this play out in each scenario, and what would happen to crypto and risk assets if any of these scenarios play out. Let's take a look at what I think will happen in each of these scenarios. In scenario one, worst case scenario with rate hikes, I think what we would see is as soon as the Fed announced it, or we kept seeing increased inflation numbers, stocks and crypto would go down. They would respond by retreating in price, and people would pull money out of the stock market. Now, in scenario two, if we had a recession, I think what you'll see initially is stocks and crypto will go up because as the Fed starts reducing rates, that's bullish for the economy. And stocks react very quickly to information like this. It's called the Goldilocks period, and it's very common before stock market crashes, right before a recession. So I don't think there's any sort of immediate alarm here, but definitely something to keep an eye on. And as the Fed starts reducing rates, I don't think that's a sign to just immediately sell everything, but I think it'd be a sign to stay on our toes and just, be ready to make a move if things start to worsen. Now, scenario three is the best case scenario. That would be a soft landing. And in that case, we should see, a mild decrease in stock assets for a while, before going into a really strong rally and recovery. Now, I hope this video didn't scare you. That was not the intention of this video at all. And while this isn't financial advice for you, I think we've got months, quarters, or even a year plus till any of these scenarios, might actually play out. It's more a lesson to keep an eye on what's going on in the economy and, use the data to make decisions on our exit points, which I'll do more videos on in the future. And if you want to receive notifications when I put those videos out, I would really appreciate subscription. And, I'm looking forward to seeing you guys here next time and being successful together.